talk about risk reward. Okay, we're going to talk about the parameters of risk reward. We're going to talk about why, and then we're going to talk about the best way to find that risk reward. Okay, and how to use it when we're looking for signals. Okay, and that's going to show us a little bit about structure. We will talk more about structure on Friday, saying structure is king, and we're going to talk about higher highs, lower lows, those types of things to define some structure. But today we're going to talk about signals and risk reward. And we can talk a little bit about why we avoid news. Because look at this mess, right? News came out, up and down, trying to figure out what it wants to do. Not a good couple of last hour or so in this half hour or so in this market. Okay, but what we're going to talk about, we're just going to go find a good signal here. Let's go take this guy. Okay, we're going to talk about risk reward. Okay, so our risk reward should always be around. I'd really like to see this break above, head back up here. After this news, the reaction, the action. Do you think this is going to head back up to this space? 50 pips or so. Okay, just so everybody knows, I'm looking like this wants to head back up. It holds this 238 again. It can break a little bit of this. You can see lower high. If it can break this level, pull up here, pull back, up we go, right? Break this little high, pull back into that space, confirm it wants to go up, and up we go. We can find ourselves a position. But we're going to talk about risk reward, okay? So something we want to talk about here is what is our risk reward? Okay, our risk reward should always be 1 to 2. Now, lots of people put that up wrong. I always put 2 to 1 or whatever that is. Risk is always first. Why is risk the first thing we calculate? Because the name of the game in trading is capital preservation. So we want to know what we're going to risk to get what we need. Because that's what we're willing to put into the market to get out of it, right? The reason we're looking for a 1 to 2, sometimes we don't get that 1 to 2 because we are moving our stop loss into profit and those types of things, right? But then you have to remember that once your stop loss goes into profit, your risk is 0. So any profit you take is going to be a good risk to reward ratio, right? So I'm going to talk about this buy signal. And we had this open and we came up here. This was a good buy signal, okay? We want to talk about our risk reward. The easiest way to look and see what our risk reward is to use one of these positions, right? So we have this nice signal here. Okay, we're going to put this up. Our risk reward should always be 1 to 2, which you can see 1 to 2 didn't quite get to off that signal, would have just missed it. Right? Okay, we want to have that 25 pip stop, and we could have had a much smaller stop loss here, right? Right, 25 pips would have been just back to here, but you can see that's way below the 238. So this very easily could have been to the back of this 1 minute candle, and you could have had your 35 to 40 pips for 1 to 2, right? Very easy to see. It's telling you what your risk reward ratio is here, right? Risk to reward. 1, right now it's 1 to 2.07. That's our risk reward, okay? It's telling you what that risk reward is on this box if you ever want to take a look, okay? Now, why do we use 1 to 2? Because math is super important in trading. And everybody's going to tell you, you should trade like a robot, right? You should be using mathematics, all those things, right? We want to make sure that whatever we're risking, we're going to get the reward we're looking for, right? Super, super important to get that risk to reward, because that's what's going to move you forward while you're still taking losses, right? Because we're going to take some losses along the way. It's all part of the deal, right? So we want to make sure that we're getting whatever we're risking, we're getting that reward, because that reward is going to have to counter some of that risk, because sometimes we're going to take losses, right? And if your risk reward is 1 to 2, you don't even have to be a 50% trader to win. Okay, so we're going to do a little math on here and talk about why our risk reward is 1 to 2. Okay, and yes, that changes, right? Lots of us are trailing our stops. See, this thing didn't break up. I waited for this to tap that and retest. It's come all the way back down. Looks like I might want to drop a little bit lower again. I might even get a better entry here. Okay, but let's talk about risk reward and the math behind risk reward. Okay, and I know that lots of this is very basic for lots of people, but let's go over it again and why. Okay, 1, to 2. Okay, the reason being, let's say it's 25, 50. Okay, let's say we go 50%. Okay, let's say we only get hit. Okay, those small will still move your account forward. You have to remember that when your stop loss goes to 0, when your stop loss goes to positive, your risk reward is completely different now in that trade. This is where we start our risk reward. Just remember that your risk is now 0. You have no risk. You don't have to. Now your risk is 0, right? And I know this is the parameters we start with, but getting to break even or getting to secure 5, 10 pips, that is going to change. Your risk reward now is there's 0 risk. Now imagine you could take 20 trades with no risk. It wouldn't matter how much your wins were because they're going to weigh out a lot. They're going to, even if they're 10 pips out of the 20, you get 200 pips, which could mask, 8 losses, right? So the reason we want to do this is because we're going to talk about the math. Say we go 5 wins, okay, 5 losses, right? This is a 50% trader. How many people think without moving their stop loss and jamming and moving early, they could be 50%? They could hit 50% trading. There's a great pullback. This thing's already be up and locked already some pips before it gets back to that top. But how many people think they could hit 50%? I would hope that everybody in here could win 1 out of 2 trades. Okay? Now, 5 wins and 5 losses. This is why the math starts like this. Okay? Because if you take 5 losses, that's 125 pips. Okay? Okay? And you take 5 wins, right? You're talking 250 pips, right? That puts you positive 125 pips, right? That's how the math works. That's why we do this, risk rewards. I'm just trying to get into a little place here where you can see it a little better. Let me move that. Cool. It won't let me move the freaking thing. It's annoying. Okay, so you'd be positive 125 pips. I mean, you could literally be a 30% trader and still win, be ahead here, right? If you take, we can just go in here, right? Man, this thing is on something today. There we go. What is going on? Well, thank you. I don't need the dictionary. There we go. Okay, let's try and get, okay. Okay, now you're up. Let's say we take 2 wins, okay, and 8 losses, right? That's it's going to be 3 actually. Let's do 3 and 7 just to show you what break even would be. 3 and 7, okay? That's going to be, I'm just going to move this. This is annoying me a bit here. Okay? Let's get down to business. Okay? 3 wins and 7 losses. Okay, so our 3 wins is going to give us 150. Okay, and our 7 losses is going to give us 175. So you can see that that's only negative 25 pips. So at 3 to 4 wins, you're breaking even. Right? That's why our math must work. Okay? That's why our math must work, because we have to make sure. I mean, if you're trading at 90%, you can take whatever wins you want. It can be 2, 3, 4, 5. It doesn't matter. You trade at 90%, your account's going to move forward. Right? And moving our stop loss and doing those things, right? Okay? Doing those things are going to move our account forward. Now, there is a reason why we do this with our math, because if we are just leaving our trades, and I'm going to take that out, this is why we need to protect this math, right? Okay? And so what we need to do is we need to make sure that the math is going to work out. Now, you go be a 90% trader, like I said, you take 10 pips a trade. You take one loss, you're still moving your account forward, right? That's why I get super comfortable, because I'm trading with such large capital. That's why I get super comfortable just taking some of those pips, right? So we have to make sure our risk reward makes sense. Okay, I'm going to tell you the sweet spot on this trading. And this is why we would have waited that pullback out, because this thing has reversed right back down. And we're going to have to take a look at this counter move here. Right, I just wanted to see it break above, pull back, and then head up. And it's pulled back right to this 238 again. So we're going to see what it wants to do here. I think this is going to hold and still push up. But once again, this thing's consolidating like crazy. So our risk reward must be 1 to 2. Okay, but we are able to take our risk away. And this is one of those things where I talk about, and you may miss out on some of these TPs. Okay, it may happen. But protecting your capital is what's more important. I'm going to get into a little bit of a rant here. We talk about risk reward, and then we'll get onto the charts, see if we can set something up here. I got to have a little bit of a short day today, just because my poor Riggins is getting neutered today, so I got to go get him. Okay, so one thing that's super important is, what type of trader do you want to be? Because what's the goal in trading? The goal to trade here, and the goal we have, is to move our accounts forward, right? So what type of trader do we need to be? Do we need to be getting 5% a day? Do we need to be getting 10% a day? Do we need to get 20? Do we need to get all those things? Is that stuff necessary? No, we're here to trade long term and move our accounts forward. That's what we're here for, right? That's why we're here, is to move our account forward. Not go and brag and not show everybody how great we are, not any of that crap. Okay, we're here to move our accounts forward. Now, if you can trade at a 90% win rate, do you think, oh, that's why it looks like that. Okay, do you think you can be profitable? Because getting risk-free is my favorite way to trade. And I don't really care if I take 5 pips, 10 pips, 20 pips. Okay, I don't care. Because as long as I'm taking pips and we're going blue, we're moving forward, right? That's the point. And so when we talk about our risk reward, how many people in the chat would love to be risk-free every trade? You know, the problem is we did this mindset, and we talked about our psychology yesterday. We talked about our FOMO. And we talk about the things we miss out on. And sometimes when we go, into break even and go for 5, 10 pips, right? We worry about the things we might have missed out on. But imagine, and I'm not making this up, okay? I'm about to hit my 100th trade. Okay? I'm about to hit my 100th trade. I am 90 right now. I am 96 and 3 in my last 100 trades. Now, some of them aren't big. Some of them aren't 100 pips. Right? I think I have one in there that's over 70, but there's 50 and 30s in there, and lots of 5s and 10s. But do you think trading at 97% is going to move your account forward? Hell yeah. And that's why I just take what I take, man. I'll just constantly keep taking what the market's going to give me. And it may seem small. It might be $5 here for you or $10 there for you. It might seem small, but all that matters is that account moves forward. That is literally all that matters. Right? It's all that matters. And so that's why I'm okay with being risk-free. You can see this trade, if you would have just left your parameters open, would have hit a TP, right? But you went to break even, got to this level up here, right? You would have moved your stop into 10 pips, would have taken, you would have got 10 out of this, right? But you would have been risk-free at 10. You've secured 10 pips. Maybe that's 0.5%, or maybe that's 0.25%. Doesn't matter. It's risk-free. How many people, if I can tell you that I could take 50 straight trades and get them to risk-free, how many of you would give me money? Everybody. Now, if you can get to the position where you know that you can get risk-free. You know you can get 0.5% or maybe 1% or sometimes a couple of percent or whatever that might be. And sometimes you might take losses. Sometimes these might not get to a protected position and you might take a loss. But how many people can move their account forward? That's why I go risk-free. And then you're going to find this mentality once you do this for long enough, once you go risk-free long enough, you're going to get to a place where it doesn't matter what you missed out. Because at first, it's going to seem very small. So this is a little bit of the psychology stuff again, and we're going to go over it, right? Okay? Is that once you do this for like 2 months, you're going to be like, man, I can do this forever. Once you trade like this for 2 months, knowing that you can get to risk-free, you can take your little pips, sorry guys, you can get to break even, you can look back and be like, oh man, even just doing this very easily, protecting, moving forward, right? I've done 20% over the last 2 months. Because it seems what happens is when you look out and you look at this overall picture, you look at the overall picture of trading. Okay? Not just in the daily. Because the problem is we get stuck in these short-term mindsets, and we're going to talk more about it, but we get stuck in what we're going through instead of where we're going to. Now, when you do this and you just take what the market's going to give you over, you might take some losses along the way. That's okay. But I promise you, if you do this, at the end of the month, you're positive. It might not be huge. It might not be 40%, but it'll be positive. And isn't that what we're here for? Is to have positive months through moving our trading accounts forward. That's what we're here for. Not to go brag that we did 40% this month, because I promise you the people that are telling you that stuff are going and giving it back. And we need to be protecting our capital as we move it forward. That's how we trade. That's how we trade long term. Imagine 1% a week for a year. Imagine 1% a week for a year. You took your money, you 52%ed it instead of getting 0.01% at your bank. Just let trading be trading. Just let trading be trading. Follow this risk reward parameter. That's where we start with our trades. Move your stop losses into profit. Take what the market's going to give you, and don't worry what you might miss out on. Because guess what? You might be missing out on a loss. Okay? Sorry, guys. Probably was very loud in your screen. Sorry. Okay, let's get on the charts. That's our risk reward, how we use it, 1 to 2. We're going to talk about risk reward and structure a little bit more here at the end of the week. Okay? All right. Sorry, I'm going to mute for a sec here and cough because it's going to get loud. Okay, so we are in an uptrend. Now, I don't like where this is sitting. Now, I would love to see it get back on this side of the 238. It's been below it here, right, since Monday. It's made a couple of runs up and then drop. We haven't had a shift in trend. It shifted to up, right back down, shifted to up again. And I was holding in this space, holding right at the top of this level. News flashed down here, grabbed some volume, pulled back up, right back to the top. Now it's just sitting right in the middle. So what do we need to look for? Right, we're just slightly below the POC, essentially right on it. We are in an uptrend, but we are below this 238 on the 50. Okay, so we shift over to the 1. This something we have to look at here now. Okay, this is something we're going to talk a little bit more when we get later on into supply and demand. But this is what we call CET. Okay, consolidation, expansion, trend. Right now, what is this market doing? This market is consolidating, right? So we can get into this. What I like to do, and I do this with my eyes, okay? It's the C part, it's consolidating. And I do this with my eyes, okay? I tend to see the consolidation, I see the levels, but if you want to practice putting a box up, you put a box around the consolidation. So we're gonna let it consolidate, okay? Let it do its thing in here. There's a bunch of things that are telling you this is consolidating. First, 238 is flat. Second, 50 is flat. Third, 20 is flat. It hasn't broken up either of these directions, okay? So I just like to put a little box around there. I do that mentally. So I don't have to put this up here, but I would like you guys to practice. If you want to train your eyes to start to see it, put that box on there. You need the market to expand now. It's the E part of it, okay? It needs to expand out of its consolidation, which means it's either going to go down, okay, and then on trend, whatever direction it wants to go, maybe it pulls back here and heads back down, or it does it the other, okay, does it the other direction, okay, or it does it this direction. But you need that move out of this space, okay, and then it's going to tell you what trend it wants to go on, okay. Okay, this out of this area is your expansion. So you want to see the market expand, okay, whatever direction that is. And then after it's expanded, it will go back on its trend. Wherever, it doesn't matter which direction the expansion is, you're going to want to watch for confirmations. I would really like it to come down, then break and push back up so we can stay on that 15-minute trend. But this consolidation is going to keep me very patient, okay? We want to see it expand, which is the E of the CET, and that's this move out of this consolidation. Okay, we wait out that move. Okay, then we want to wait for this pullback and then on its way for confirmation that it's going back on trend. Okay, that's what we're looking for. And this wasn't in part of the boot camp, but it's doing it right now, so I wanted to show you. Okay. And I do think this will be up. Okay? I do think this will be up. But we got to wait for it to break. So I'm just going to take that little box off there. Train your eye to see those things, right? See that consolidation? You can see a big wick there. You can see it came back to the top of this. If you look at a higher time frame, right? It's come right back up to this level. I do think it's going back to this level today and potentially up to here. Okay, 270. And we just got a signal. I want to see it get out of this space. Okay. We wait the pullback because this could expand here and just go down all the way down. Grab more volume. This could just be a little flash up. We want to see it break out, then come back to the top of this area somewhere and then head up. Okay. Let's go look at our friend Nas. Nas doing the same. Ooh. Nas is in a different position on the 15 though. Nas is above this 15. Okay. Yep. There's an alert. You can set it. If you have LT on, or if you have TradingView on, or if you have Killshot on TradingView, you can set it. I put a video in the. I'm working on alert channels as well here this week. So next week, hopefully, we have those to launch. But if you go into our US 30 mentorship, there's a video on how to set up alerts. Okay, so this is a much better trend for me. I'm much more confident in this NAS trend. Pulled all the way back up here. Okay, I won't take this signal. No, look at what it's doing on this signal right now. I don't want it. Okay, this broke the 238, shifted in trend. It did happen in news, right? Pushed back up above this space, pulled back down. What did it do? Once, twice. Double bottom on the 238, pushing back up. So I want to find my way to get into this thing up. I wanted this thing to pull back into the space again. So let's give us a nice pullback and see what it's going to do at this 238, or if it's going to break this level. Maybe it's going to come back here and flash and grab this and then head back up. Okay. Heavy consolidation, so I don't really know where it's going to come out of that. Do not look at all these signals. So make sure you're getting a nice pullback and entry. Everything's up. And it looks like it wants to stay on the other side of this 238. So let's see if it's going to pull down here to grab more volume before it wants to head back up. Okay? And let's go look at gold. Okay? Gold is on one. Well, I didn't get my pullback here that I was looking for, as you guys can see. But it did go and shoot right back up. Little magic arrow. Look at this 30-minute pullback. Double top, pulls back to the EMAs. Holy moly. Off she goes. Uptrend, sitting up here at an all-time high. What do we need to wait for? On the 5, it actually probably looks pretty good. Okay? On the 5, this probably looks pretty good. We probably missed a really nice move on the 5 for a signal, and we sure did. Red candle, okay? There'll be a notification. I'm putting signals in the chat. We're going to be doing some different things here. We got an app coming and all these things, but you can set this alert so that it tells you that these signals come back. Yeah, on the 5-minute on gold is a pretty good signal. You can see this triangle came, red candle, pulled back. Look at this EMA. So we're going to be going over this next week too. This move here. These EMAs all crossing each other like this was super trend. But you can see a red candle, so what do we need to wait for? Pull back. And then bam! That move right there. Rated news. Right in the middle of this. 774. Would have been over 1,000 pips. Bam. Pulled back to it. Bam. Pulled back to it. Bam. Look at these pullbacks. So tomorrow's PB&J. So tomorrow you're going to get taught how to use this PB&J, what the confirmations are for it. Okay, so now you need to see this thing pull back. You cannot jump into this move right at the top. So I want to see this. I don't know if it's going to come, but I do want to see this come back to the 50. So you can see there's a nice level there, nice level here, and then right back to this 50 and see if this thing wants to head back up. Give it some space from that all-time high. Try not to jump into a buy right at the top because it could just reject your teeth or hit your stop and then move on its way. Huh. Okay, so that's what I'm looking for in all these charts. I'm going to start throwing a pair in here, we'll do 2 pairs. We'll do Euro USD and USD JPY. So starting tomorrow, going through our cycle, we'll add a couple of pairs that you can use on here as well, just so you know how to use it from pairs. And then I'm having a conversation about what we can do with crypto stuff. And we'll go from there. Because this works on crypto as well. And it works very, very well on crypto. So we'll be looking into that as well. Okay? And how I can maybe do a call on another spot or something. Okay? But we still need this to expand. This is still in this middle. For stop loss, I was confused with stuff. I know it's 25 pips stop, but is that 25 pips from entry? 25 pips from entry. Always entry. Otherwise, that messes your risk reward. What if the 238 is 100 pips away from you? You're going to put it at 125 pips? With 50 pip TP. You got to make sure it's 25 pips from entry. Okay? So I don't like how this is holding. I would love to see this pull back into this space and then head back up. Okay? I want to see this, so just go 25 pips from entry. I want to see this break below. I don't know if it's going to do it or not, but I'd love to see this pull back into this space, and then up we go. Okay? Bum, 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 ba-dum, bum, 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 bum. Bum, bum, bum. Oops, I didn't want to do that. Okay, we got to see this expand. I'm still looking, the trend is still up, so no matter where it expands, I'm still looking to go up. So even if this thing goes and drops and flies down, I still think this wants to head upwards. Okay, so let's see it expand out of this space, and then we'll make a decision. Okay? Okay. All right, that's our call today, guys. So watch out for these magic arrows. I'm still looking for this to go up. We need a nice pullback in gold. NAS holding this level 2. I want to see it come down just to give us some better entries.